Hello guys, how are you all? So I'm here again with a weekly analysis, and I'm going to talk about a broader view of the market and also give you guys some stocks picks that I have. So let's start with watching the charts of dollar index. As you can see the charts of dollar index. I've talked about this before. I'm still waiting for this level to get broken out, which is approximately 104.258. If this level breaks out, what will this mean is that the Dow theory in dollar index from downtrend will change to an uptrend. um, I've shown you guys how to check Dow theory, like lower lows, lower highs, and then a change in pattern. So just a second. So we were continuously making lower lows and lower highs on dollar index, and now we have started to make some change in structure, higher lows and higher highs. So if we break above this, what do you say, this level, we will again come into an bigger uptrend as this Dow theory, which is in a downtrend, will get violated. Also, it's not that if we break above, we need to sustain above this level for the Dow theory to change. So in short, this level is very important. And also, just to make you understand why the dollar index sometimes increases, is because the yields in the US are also favoring it. So as you can see that the yields have also pushed up in the past month or so in the US. So that's the reason, that might be one of the reason that dollar index is going up. So again, for the Dow theory to change on yield, this high has to be taken out, 4.191%. So if both of these things happen, like yields breaking out and changing the Dow theory and also the dollar index, the equity market might start to come under pressure. But till then, I don't think there is any concern yet, because their major trend is down. Like if you see the monthly charts, they have been going down and down. The weekly charts also, it's down. So yeah, and now let's talk about the US market. S&P 500, I told you guys that we have broken above this major what do you say, resistance, or the post COVID high. So this was around January 20, the post COVID rally high, we broke above it. So in Nifty, we are already above this post COVID high, way above this post COVID high. But the US markets weren't able to break this high. This is our post COVID high. So we have broken above this, like 2 years back. But US markets were underperforming and they weren't breaking out of this post COVID high. So now that the US markets have also confirmed that they don't want to go down, and they want to go up from here. So as long as we are above this breakout, that's approximately 4800, just a round number here, it's 4800 levels in S&P 500. There is, I think, no need to even think about shorts for now. The view can either remain buy on dips. Either no, it should remain buy on dips, or it should just remain being long on the markets on the equity portfolio. And I think there should be no shorts in the system as of now, because we are trending. So it would be suggested there that go with the outperforming stocks. For example, Meta. So what I did was, when the earnings came out last week, there I had so as an Indian investor, I have, so this is not a, what do you say, a tip or advisory or anything. It is just how I look at the markets. So last week I had a I had an idea. So Meta was trading at all time high, nearly above this 31st January or around 30th January. It was trading around 400 levels. And so, for example, if someone had two stocks in their portfolio, one is Meta, which is trading around 400, and one is Tesla. Tesla had gapped down around this 30th January, 25th January due to its bad results. So the one investor should not think that now they should go and invest in Tesla. They should rather look or invest into stronger stocks like Meta. For example, if one have bought Tesla at the breakout of all time high, they would have it would have resulted in gain of like 20% in less than like 2-3 days. So what I'm trying to say here is that it's not that you have to buy the weakest stocks in the market to make money. You always have to buy the expensive stocks. People might be thinking here that it is above all time high and it's so expensive now. Why should I buy the stock? But this is the time when you should buy the stock, because you have a really small stop loss here. For example, if I would have added, I'm having some positions in Meta. So I added some positions here more. So I had Meta from like somewhere at this levels. I added some more at the break of all time high. And now my trailing stop loss is below here, like around 380 levels. And now further I've trailed it to this gap up. 452 is my final stop loss for the equities I'm in. So that's the so just wanted to share with you guys this trade. This is not an advisory services, but I'm trying to teach you how to actually think about the markets and really build your positions in a stock, and which stocks you should actually choose, and which stocks you should actually stay away from. So Tesla, I'm not saying that it's a bad company. I really like the founder. He's one of the most inspiring guys that I've ever read the books about. So, but it is underperforming now. We can think about Tesla going forward. If it breaks about 266 levels, then this major trend line will also break, and then we can have a look at it. If it breaks about 260, 270 levels, now I don't think now, because this is going to be a really slow move. Though it will be a very good move, a 36% upside from here. But if one like gets in here at the breakout and tries for an all-time high, he will get this 55% of the target. He might get relatively very quicker, and it will be a more what do you say, a high probability bet than buying buying Tesla right now, because what might happen is if earnings again come bad for the next quarter, Tesla might just sell down to what all-time lows from here. Like it might go till here. You never know. It might show us 100 again. So I'm not saying that you go and buy Tesla or Meta right now, but just try to think about it, that we should always, as investors, buy stronger stocks in the market. For example, I was reading a book today. It said that if you want to get a good car, for example, if you want to drive a Ferrari, you obviously have to pay a premium for it. That's why you go and buy Meta right now and not Tesla. Meta is trading at much higher prices right now, and like the higher price level, like all-time highs. But you are getting a really good company at a one of the quotes of Warren Buffett also said that buying a fair company at a good price is worse than buying a fair company at a expensive price. So by this I just mean that you always choose a company which is doing well on charts and plus in businesses. Let's move to the Indian markets. I hope I was able to like explain your concept. So now that I've shown you that the US markets are trending, they have broken above all-time high. Indian markets are also trading near all-time high. So I don't think there is any reason to be shorts here. We can, for small what do you say, for short-term trades, this can be a stop loss for being longs on the market. But until and unless we are above this level, it's a good long on Indian markets. I think we are likely to break above this high sooner or later, and we are likely to head up. But for the short-term trades, this is the stop loss, the on being longs. The longer view still remains bullish until and unless we are above this levels of 20,000. I've given you already this number. Same for Bank Nifty. I think Bank Nifty currently is relatively underperforming now as compared to Nifty. So let's see. I've drawn this channel in Bank Nifty. It has been going, what do you say, trading inside this channel since last I don't know, this channel is 2-3 years. It comes from 2-3 years of price action from 2019, the post pre-COVID high, then pre-COVID low, and it's connecting all the dots. So if Bank Nifty breaks below this channel, I think we can be short on Bank Nifty but still be long on Nifty, because what might be happening here is, so banks and financial companies now are starting to relatively underperform. For example, if we see the charts of Bank Nifty relative to Nifty, I'll just show you and compare how this Bank Nifty. So as you can see, this relative strength chart of Bank Nifty versus Nifty. So Bank Nifty has been underperforming Nifty since let's see, since I guess since so long, since like 2019. So now that the Bank Nifty is so weak and we are likely to see some breakdown on the charts of Bank Nifty, you can actually be long on Nifty and not be long on Bank Nifty and just cover this sector, because there might be some sector rotations that might be happening here. If you can go and have a look at some sectors like CNX, PSCs, it might be starting to outperform, and it is outperforming Nifty. So it would be advised to stay long on these sectors rather than being long on Bank Nifty. So yeah, that's the view on Indian markets. One of the picks that I want to give you guys is Infosys, one of the top 4 companies in Nifty index. So the long positions can be from this is a good 1:3 risk reward trade with a potential, I guess, 14% upside. So this is the stop loss around 1600 levels, and the target is around 1940 levels, an all-time high. And if this gets broken out, the targets can be the stop losses can be moved towards all-time high, and we can keep trailing our positions in Infi. So this is my view on Infosys, and one of the good picks that you guys can add. Now it's relatively late. I think I gave this in the last I think video. I don't remember really if I talked about Reliance, but what I did was I added some positions here around 2500, and my target was 3000. So I am achieving this target now. Again, I bought this stock at all-time high levels. Can you see? And I bought it at around like 1st January. And can you see the, what do you say? Can you see the past returns that I'm trying to get if I'm buying the stock at all-time high? Because the chart is showing me that something is good, something good is happening. And when I'm buying the stocks here at all-time highs, I'm having a very small stop loss. So for example, if I'm buying it at this breakout, my stop loss is hardly here, and I had a target of this. So I'm getting 3:1. If you even make your stop losses tight and just keep it below the resistance level, you can get a 5-hour risk reward. So a very good trade for me. I will keep trailing and holding Reliance in my portfolio. Very good companies here. So yeah, that's about it. And the topic for today's weekly analysis video was to give you out levels, give you out a longer term view, and most importantly, tell you how to choose sectors. You can't be in an underperforming sector. So Bank Nifty is an underperforming sector. I've shown you how to compare sectors, for example, how to use relative strength charts. So use it for each sectors, and then when you identify the outperforming sectors, then use it for the individual stocks in that sector. For example, if CNX PSE is outperforming, which of the stock is outperforming under CNX PSE? So I know of one of the stocks which is outperforming, which is PFC in CNX PSE. So I will go and have a look at this chart of CNX PSE is relative to PFC. PFC has started to underperform. Let's look at another chart, NTPC. So it is also underperforming. Let's look at another chart, Scale. Scale is also underperforming. IOC. So you can see that this chart relative to CNX PSEs. So Indian Oil Corporation has started to outperform Nifty PSEs, and it's currently doing really well. So it has started to go up the relative strength chart. So that's how you can pick strong stocks in a particular sector that you identify. So that's all for today. I hope you guys have a really strong week ahead, and hope you all the best. Try to keep your average losses smaller than average profits, and that's how you'll be profitable in the long run. See you all in the next week. I'll come midweek if I have anything important to tell you guys, and that's all for today. Thank you.